What about the sales activity in the hotel sector? It is a bit like retail, or more so, very tightly held. Has all this new stock led to any increase in turnover?
Well, again, I think the buyers would have you like to think that there was an opportunity for them to come in and convince vendors it was a good time to sell. Time has shown that of the transactions that have taken place over the last 12 months, and there hasn't been a great deal, but namely the Crosley Hotel in Little Bourke Street, more recently the Travelodge in Docklands, and obviously the Hilton at Melbourne Airport, yields have remained very strong. The real difference that people need to take into account when they're looking at hotel yields is the tighter yields are being attracted by the hotels that can offer a new owner vacant possession. Now, this obviously brings multiple purchases to the table. It may not necessarily mean that a new owner wishes to change the manager, but they certainly wish to be able to get in there and influence the operation of the business. And that's certainly where we're seeing greater demand throughout the marketplace.
Okay, what about financing? Is that limited in any way the investment market and the development market in hotels?
There's no doubt that the finance market has toughened over the last, probably over the last 2 years, maybe more. At the outset, I suppose the toughest thing to do would be to get a new hotel out of the ground. We're certainly seeing that a number of the hotel proposals that have been around, and some are more advanced than others, will probably see a blend of hotel and potentially residential, which is a formula that's worked in the past quite successfully. But at the same time, I'm sure that lenders are more comfortable when they're looking at an existing product and they can see a good trading track record in the past and moving forward.
Do you think there's any particular opportunities for more new hotels in Melbourne?
Well, we're aware of new hotels certainly getting into advanced stages in the east end of the city. We're certainly also aware of discussions at South Bank in more than one location. But we certainly believe that given the growth of the Docklands precinct, that we're hearing more so from general managers of hotels that some of their more regular guests are not appearing as regularly because their workspace is now down in the Docklands, and the commute is something they'd rather avoid, even if it's a reasonably short one. I think if the opportunity was there for them to stay in a reasonably high-end hotel operation, that's something I'd certainly look at.
Okay, so let's talk about pubs for a moment. That's the other part of your work. Pubs have been through quite a wild roller coaster ride of values over the last couple of years. Has the sector now settled down?
We're pretty fortunate here in Victoria because we haven't had the roller coaster that certainly New South Wales and the Queensland market has had. We're fairly staid in that respect. There have been a variety of sales, not a huge volume, some of them with, I suppose, what you could describe as some pressure on them, but not a huge number across the marketplace. Probably what we're seeing is those that own good operations certainly would not want to be putting them on the market in the climate that we've faced over the last sort of 12 to 18 months. And I think that they're more likely to be holders of the asset unless significant offers are put on the table.
Okay, so the operational issues in pubs are very important in impacting on the income stream and the value of the property. Are there any particular operational issues that are likely to impact pubs in the year ahead?
Well, the most, I suppose, publicised one is those that which has affected the gaming industry. We again sat here 12 months ago wondering where we were headed with the offering of the gaming entitlements during 2010. Now we've got over that hurdle. We're all sitting back very much awaiting August 2012 when the entitlements will actually take into effect. Probably what we weren't expecting was that typically gaming in this state and others has been very much a state issue. The dark cloud that seems to be on the horizon now is coming from more federal issues and pressure from the federal government to potentially make legislative change that may affect the industry.
Okay, so let's summarise now with a few parting ideas for our guests for the year ahead. What are your key tips?
Oh, listen, I think whether you're in the traditional pub market or in the accommodation market, it's innovate, it's renovate. if you've got an existing operation, you are well ahead of those that would be potentially trying to start up a new operation alongside you to compete with you. So if you can stay ahead of the market and read your customers and what their demands are, you're certain to succeed.
Okay, that's great. Thanks for your thoughts this morning, Scott.
Thanks, Kevin.
Okay. All right, let's wrap it up now with a few key messages. We think Melbourne is going to lead the value cycle nationally, so it's still very much going to be the focus of investor interest over the next 12 months. We think Victoria's economy will continue to grow, the sort of moderate, sort of middle-level areas that it's grown over the last few years, so no major change there. We think the underlying property drivers are going to remain quite strong in 2011. Things like employment, retail turnover picking up, the imports in through the port, all those sort of drivers are strengthening. We think there's going to be an imbalance between a lot of buyers and not many sellers, and it's certainly going to put some pressure on pricing through the year ahead. And we think in a total returns ranking sense, if we had to line them up for 2011, we'd say office was first, industrial second, and retail third, which is a slightly controversial ranking to put retail there, but we think there are certainly some issues surrounding retail for the year ahead before it strengthens. So in closing this morning, I'd like to invite Mark Granter, our Chief Operating Officer, up to the stage to say goodbye.
Thanks, Kevin.
Welcome, Mark.
Well, firstly, thank you, Kevin, to you and the team, the presenters and all the people behind the scenes who have put the presentation together. Well done. I'm just conscious of time, so I'll be very quick. I'd also like to thank you all for your ongoing support as clients of our business. We enjoyed a very successful year again last year. We're always looking to continue to grow and diversify our business. We recently announced that we're in the process of acquiring ING Asset Management in Asia and Europe. Upon completion of that acquisition, that will make us the largest property fund manager in the world. Now, on that note, I'd like to close and thank you for your attendance. Good morning.
Well done. Well done.